Investors and traders, welcome to the channel. Today we'll be taking a look at the 2-year Treasury Note, and also we'll be discussing why we believe the Fed may pause raising rates in near future. This video is for educational purposes only and it is not a financial advice. So what we are looking at is a long-term chart of the 2-year Treasury Note. What we can see is that there is obviously the rates peaked back in 1981, and then there has been a steady decline in rates. In fact, the rates reaching near zero back in 2020 because of the events that took place. I am also going to overlay the Fed fund rates, and what I want to draw your attention to is the fact that the Fed fund rates closely follow the 2-year Treasury Note. So what we can see is that whenever we see that there is a peak in the yield for the 2-year US Treasury Note, we have seen the Fed rates pausing, and with the 2-year Treasury Note yield moving lower. In fact, the Fed rates kind of follow that, and those begin to move lower as well. So you can see it's within this overlay, this correlation is pretty phenomenal, and I'll let you be the judge of that. But personally, I think it's pretty phenomenal. So I'm going to remove that for now for our analysis. Okay, now what I would like to do is I would like to draw your attention to these shaded boxes in blue. 1, 2, 3, 4, 5. These are the 5 instances in this downward decline where the rates have actually risen quite significantly. And what we find is that there's perhaps a figure in terms of the number of points reached, which kind of causes a pause or a peak, and then perhaps a decline. So what we see is that that figure seems to be somewhere between 400 and 450, just generally speaking, because I'm using a line chart, and here these numbers could be a little bit approximate, so hence a range of 400, 450. So what we take a look at is that this one going back in 1982, December 1982 to somewhere around July of 1984, this was about 415 points. Then what we have is this one, September 1986 to March 1989. This is about 388 points. This one is from 20th September 1993 to sometime in December of 1994, about 412 points. This time the interest rates actually began to rise 30th of June 2003, and they kind of peaked around 29th of May 2006 at about 415 points. And we know that after that what happened in 07, and because of those events there had been the interest rates had been actually declining pretty quickly. And here we reached the bottom in 2020, March of 2020. And here what we see is that again we are back in that range due to the actions of the Fed, where they have been hiking the interest rates rather aggressively last year. So this is about 454. What is really interesting to note is that the yield on the 2-year note is actually moving or coming down since November 2022, which suggests that based on the analog which we saw with the Fed fund rates, that perhaps Fed is reaching a point where they might actually begin to pause the interest rate hiking cycle they have been on, which has been rather an aggressive one. And obviously this is dependent upon the data of the inflation, so basically the headline CPI and the core figures, and Fed will look at that and they'll make a decision. We have the Fed meeting coming in next week. The kind of market anticipation is perhaps for a 25 basis point rise in the Fed fund rates, which personally I believe is quite possible. And depending upon the data, maybe there might be few smaller rate hike increases, and who knows what the Fed is going to do. They might if decide to If they decide to do a smaller, like a 25 basis point rise, interest rate rise, then that could be quite good for risky assets such as stock market. Anything bigger, I'm not sure. But again, what we are looking at is basically the 2 year Treasury note and the overlay of the Fed fund rates, and how the 2 year kind of indicates what the Fed might actually do. And this analog which we are following, this suggests that perhaps we are in a range where there is a more likelihood for a pause, and perhaps depending upon the data, if the inflation begins to move lower or there is stress in the economy, Fed actually decide to lower the interest rates. So this is what we are looking at. If you like our videos, you enjoy watching how we do the analysis, then please do like the video and also subscribe to the channel. That really shows me that my videos are liked and enjoyed by people. They like watching them, and that just encourages me to make more and more videos and bring these out to you guys. And also hit that bell icon button, that way you will know when the new videos are posted. So thank you very much for watching. Please do subscribe, and good luck and good trading.